Hey everyone, Corey and Chad here with another daily editorial on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan will focus on the precious metals as we usually do, but first I want to start with silver because silver, unfortunately, just keeps moving down. Silver was on a nice run along with pretty much everything else in Q4 of last year and then even into January. But February, not a good month. We've already talked a lot about that. And now March, off to a bit of a rough start, mostly on the back of yesterday's trading, where silver is now fighting with the $20 level, not the $21 level. But it looks like it very well could be dropping down into the teens here in the near term. On a weekly, monthly chart, Jordan, how much trouble in your eyes is silver in?
Well, I think it's in trouble, I would say, in the short term here over the next month or two. I mean, obviously, it's been in a downtrend for a couple years, and I don't want to get too far off the short term, but looking at silver, it could be setting up for a potential double bottom. I mean, looking at the weekly chart, it bounced off 18 quite a few times. It went below it 1 week. There is potential for a retest of 18. So you could look at it now and say, wow, this thing is in a lot of trouble. And, maybe it's setting up for a double bottom, or maybe the bottom on this coming bottom in the next couple of months will be a little bit lower, but it still could take the shape of a double bottom. So that's how I'm thinking about it. But definitely there's a lot of technical damage, and I think we probably need to see silver retest that bottom. And at that point, we can see where's the sentiment and, where are the macro fundamentals? How is gold holding up? How close is the Fed to the end of this rate hiking cycle? So I think thinking about these things over the next couple months is critical. But to me, I would lean towards silver is going to retest that low around 18 in the high 17s.
Well, Jordan, since the mining stocks often track the moves in silver closer than even gold, whether they're gold or silver mining stocks, do you have a similar outlook then for GDX and GDXJ as far as them maybe doing a double bottom, but maybe at a higher level? Is that what you're looking at?
Yes, very similar. I mean, looking at those charts, I think they're also setting up for potential double bottoms. If you look at GDXJ, I mean, there's quite a bit of support around 25, 26. I think the low was at 25.99. And so prior to today, I mean, looking at GDX and GDXJ, we're talking about that's 20% downside to those lows. And so that gives, looking at obviously they would probably, if they retested those lows on the way down, they would decline quite a bit more than gold. So I don't know what that would mean for gold, another, 5-6% down possibly or something like that. So I don't know if the miners need to necessarily go all the way down to those levels. I mean, same thing with silver. Like looking at GDX, for example, it did bounce off 22.5 several times, even though the low is lower than that. Same thing with GDXJ. You do have this low at the very end of September, which again was at 25.99, but several times it looks to me like it bounced off 27 or 27.5. So these are the levels I would think about, but definitely silver and the miners, the construction of these charts look very similar. And that's the immediate risk here in the next month or two, is that they're going to come down and retest these lows. And obviously the fundamental picture right now, the macro fundamentals are aligned with that, because now there's talk and the market's kind of potentially discounting the Fed could do 50 basis points at the next meeting. So if we think about, even though the Fed is coming to the end of this tightening cycle, they could still tighten a little bit more than we think over the next 3 or 4 months. And so I think in that scenario, that's enough where this downside momentum in the sector can follow through even more, even though if we are at the end of this, rate hike cycle in the next 4 months or so, eventually that could set up the sector, especially if you have some more economic weakness seeping in, that could set up the potential for really bullish double bottoms in this sector. So we have to keep our eye on that, while at the same time understanding that here in the next month or two, the trend is down and that we could see these, double bottom support tested basically.
So, Jordan, outside of these ETFs like GDX and GDXJ, are you seeing any positive aspects, any positive moves within some stocks or a group of stocks that gets you a little bit more excited than quite simply saying we're just going back to the lows of last year? I ask this because, look, there is still a bit of a financing window. Companies are raising money. We have seen a pickup in M&A. Do any of these have you a bit more encouraged rather than just this kind of down outlook?
Yeah, I haven't thought about that too much. We do have at least the 20 or 30 stocks that I follow. There are some that look strong and look like they won't test these lows. And, most of them probably will. I mean, if my view is right about the risk of potential double bottoms. But it's a good question, but I think it's a little too soon to ask that. I think we need to get, presuming that my view here is correct and that we are going to see silver and the miners come down and test those potential double bottom support levels. I think then at that point we can assess how, if there are, various individual juniors holding up and, holding well above last year's low. That's definitely possible. But I think right now it's just a little too soon to speculate on that, given that, as I said, I think in the first answer, I mean, GDX and GDXJ could still fall 20% to these bottoms. And that even though that does in the juniors, that doesn't sound like much. I mean, that is a pretty big decline. And so, yeah, I think it's a little too early to ask that. When we get kind of deeper, I think in the next month or two, then we can speculate more on that.
Yeah, Jordan, it's kind of a rough scene, and if the whole sector is going down and the metals are going down, it's unlikely many junior mining stocks, even if they're doing good work, are going to be spared. There are, of course, always a few exceptions in any cycle, but it looks like the trend for the sector is down. So what would you tell investors that are listening that have been in the resource stocks, got all excited that maybe we've seen the real low last September in silver and the mining stocks, and then eventually gold in November, and that we have been heading higher? Do you still see that as the major low, even if these get tested again? Or are you concerned that we could actually have a more extended leg down in the sector and break through those lows of last year?
Yeah, it's a good question. At this point, I'm not worried about an extended leg down, although certainly, as I just said, I mean, 20% move down in GDX and GDXJ to those lows and silver back down to the high 17s. I mean, that's very significant in itself. But I wouldn't be that concerned just because we're coming to the end of Fed tightening. Even though it could go out here with a bang, I don't see the Federal Reserve being able to. It's just there's no historical precedent for, we're going to have the second highest rate hiking cycle ever, and there's going to be no landing or a soft landing. I just think that if you think about the economy, we've seen these big increases in interest rates, but if you look at, there hasn't been that much Fed tightening. If you look at financial conditions recently, and if you think about the Fed funds rate, it's only been above 4% for not that long. So yes, I mean, they went from 0% to 3.5% or 4%, but for it to be really restrictive, I think you need to see the Fed funds rate at 4% or well above 4% for a while. And we haven't seen that for more than 2 or 3 months yet. So I think if you think about that, along with, yes, the rate of inflation has come down from 9% to 6% or whatever, I think that's why the economy has been able to avoid recession. And also, you had all the free money from COVID, which is not running out for consumers until basically the third or fourth quarter of this year. So I think that if you're looking at the macro, yes, the next month or two, maybe even 3 months, it looks negative for precious metals because the Fed is going to be able to continue to tighten. They're going to be able to get above 5%, maybe 5.5 or even 5.75, and real interest rates are increasing. That's why the sector is so weak. So yes, I mean, thinking about those things, the fundamentals are very negative for the next couple of months. However, if we're looking beyond that, the tightening from the Fed will basically be over, and then you have this significant risk of a recession hitting. So that's the bullish scenario to really get this sector moving. So that's what I would think about over the next couple months. You have to understand that yes, the fundamentals are negative here in the next couple months, but that they can quickly become really, really bullish, especially if you have a recession coming into play. You have that, which will take money out of the stock market. And then at the same time, if you have inflation that's, persisting at 4% and the economy is going into recession and then the Fed has to cut rates. So I'm just painting a picture here of how easily the negative fundamentals right now can suddenly turn really, really bullish. And then at the same time, if these charts are set up where if you get these potential double bottoms and we're here 4, 5, 6 months from now, then it'll seem really obvious. You have these double bottoms in play and now the Fed's going to be cutting rates and you have a new bull market. So that's what I would tell people to think about and understand the macro fundamentals and how, yes, they're not bullish right now, but they can quickly turn bullish, I think, as we get to the summer.
Okay, so I guess a bit more of a waiting game then, pushing out some bullish outlooks for hopefully it's this summer that I guess we get those double bottoms. Let's quickly talk about the dollar, Jordan, because the dollar's been on a pretty wild ride. It peaked right kind of at the start of Q4 last year, right when everything bottomed and the dollar moved down, everything else moved higher. Now the dollar's been moving higher, really from the start of February. It's up a little bit over 105 right now on the dollar index. And if you want to talk macro, you take a step back and now people are expecting more rate hikes from the Fed, maybe even bigger rate hikes from the Fed, while a lot of other central banks are winding down or pausing their rate hikes. Does that mean the dollar could keep running higher?
Yeah, I mean, because again, looking at what could happen over the next couple months, you have more Fed tightening than expected. And if we, and the other thing is also with bonds, where if the economy slows down and there's this threat of recession, initially that could, pull a lot of money, even foreign money, into the bond market where they could get that 3, 4, 5% yield. And so you have to buy dollars to get into that trade. So I think that's something that the dollar could also benefit from, the initial developments alongside a recession that's imminent. So you have the tightening and then you have that aspect. But again, if eventually if a recession sets in and the Fed has to ease policy, that's obviously going to be dollar negative. So, looking at the technicals, the dollar had this huge move up in 21 and 22, from a low of 90 up to basically 114, 115. So I'm not sure if at this point the dollar can make a new high. Maybe it's also setting up for a potential double top or some significant higher low. And at the same time, that would align with the miners in silver putting in double bottoms. So I'm more focused on with respect to precious metals, I'm more focused on the macro because we have seen, at turning points, gold leads the dollar. So I think that if we're going to see any significant low in precious metals here over the next couple months, that could occur even while the dollar is still trending up. And then, it becomes obvious after the fact later where, maybe the dollar rolls over later in the year.
Well, Jordan, just one more segment to look at would be the general equities in the U.S. I know that a lot of the thesis for the bull thesis in a real terms bull market would be the precious metals gaining on the U.S. equities. What do you think all this macro data means for the general stock markets in the near term and medium term?
I don't have a strong answer for that right now. I would say that, again, it all depends on, tell me when the recession is going to hit. Is it going to hit in the next 3 months, or is it going to be later this year, or maybe even next year? So I think that I would not be that surprised if we got another leg higher in the stock market. If you look at a lot of the best strategists, I know one of them was saying he was calling for 4,400, and that was even late last year. You have other people talking about 4,200, possibly 4,300. Looking at the price action, it's okay. It's not great. But yeah, I don't have that strong of an opinion on it right now. I mean, I could see, so the S&P is trading below 4,000. I mean, I could see another leg higher, and then people get excited, but it's a false breakout at that point. So I right now I don't see a huge move coming in either direction over the next couple months. But again, it all comes back to the macro, and you tell me when the recession's going to hit, and I'll tell you where the market is going. If we're going to have a recession hit in the summer or early fall around that time, then I would say around that time, then you would probably see the S&P roll over again and trade down towards that low at 3,500. I mean, it's a leading in the stock market could be a leading indicator for the macro, because if we do see it roll over and break down and have these significant legs down, even before it seems like we're in a recession, that could be a significant indicator that a recession is really imminent. So I think the stock market as an indicator is definitely very important here. But yes, generally, I right now, at least over the next month or two, I don't see a huge move in either direction.
Okay. Jordan, sounds like we're still going to be very much kind of range bound. A choppy year ahead for stocks. And, well, it's already been choppy for the precious metals sector, but unfortunately, it sounds like we might have some lower levels to be watching out for. And, hey, everyone's wondering when that recession's going to come. I can't tell you when it's going to come. No one knows when exactly it's going to come, but I do think we all know that some form of recession is somewhat around the corner. Jordan, always great chatting with you, buddy. We'll chat next week. I hope you have a great rest of your week.